Hey everybody, Tom Gentile. Welcome to another event. We have our live trade series event. Glad to have you guys all here again. It is Wednesday, March the 4th, 2020. Up, down, up, which way is it going to go? You know, honestly, if we set these things up right, we don't have to get that emotionally tied to what everybody else is doing. So I'm excited about that. You know what? I'm going to move a couple things around here. We're going to get straight into it, guys. You know, let's just go ahead and get started. Flip that camera off so we can go straight to a full screen here. Session's being recorded. We'll get the recording out to you as soon as we can after the event's over. You can ask questions here in the live event because there are so many people in here because we're doing this for the entire OptionX community. I'm going to apologize to you straight ahead. We're not going to be able to get to every single question. It's just not gonna happen, guys, but we'll do as many as we can. Also, the disclaimer you see on the screen here, okay, you can read it in its entirety when you get the recording. Just pause. But there are two things I want to mention right now before we get started. Number one, stock and options trading has large potential rewards, but also large potential risk. Number two, myself, Jay, and anyone else associated with OptionX and Tom's Trading Room, we are here as educators to show you how it is that we trade. We're not personal investment advisors. So that means we don't give individualized investment advice, and everything I'm going to talk about today is in US dollars unless noted otherwise. So welcome back, students. Those of you, last time we did an OptionX Trading Essentials event was sometime late last year. So we're excited about kicking off the end of winter and then going into spring here with 6 classes for the month of March. This is class number 3. We've got, we're going to do 3 more of these next week. Monday, Tuesday, Wednesday at 1 p.m. Eastern time. We are doing live trading. We are doing various option strategies. And if you want to tag along with us and use the scans that we use, all right, tomsoptiontools.com, and we have subscriptions that are starting as low as $79 a month. I'll show you a little bit later on how to get in there and subscribe for those of you that are brand new with us. It's actually quite simple. We have a subscribe button right there on the homepage when you log in. So let's go ahead and get started. Oh, Jay, I wanted to show you a couple of family editions. Okay. Guess which one's mine?
Oh, there we go. Yeah.
My wife got the Tesla, and I decided to get. I'm in the process of getting that big rig up there. So there's a little story behind this. I'll tell you.
You get the workhorse. Yeah.
I'll tell you guys real quick. So the story is this: we are not going to New Zealand this month. Okay, and it's not that I'm fearful of catching the coronavirus. I caught a flu bug last year that I think would have put the coronavirus to shame. In fact, I think I was coughing for 6 weeks. And so it was rough, but that's not the problem. The problem I'm concerned about is inconvenience, and that is getting back into the country. And if I am back into the country, getting stuck in some ultra long lines, possibly being quarantined. There's too many variables that made me decide not to go to New Zealand. So anyway, we were due to get a Tesla anyway, but that big Unimog up there is an expedition vehicle, and I'm trying to talk my wife. And I said, hey, since we're going to be stuck and you don't want to fly and you want to bring the animals, I said, I have an idea. Let's get an expedition vehicle and we'll travel around the country. Go up into Canada, go to the Arctic Circle, go into the Adirondacks, anywhere where I can get a signal. We'll put a satellite dish on this and getting communication set up on it, where as long as I can trade every day for a couple hours a day, and then we can cruise around and so she's not on board yet. But that's my idea, guys, is to take this show on the road this summer and go check out different parts of the country that we haven't been to yet. So I thought I would just share with you the idea. Again, like I said, she's not quite on board with this yet, but I'm trying to talk her into it. And that is a really, really cool Unimog. I mean, if you think the outside is sweet, you should see the inside. It's fantastic. The whole thing slides up, so it creates a loft on the second level. But anyway, we'll see where this goes. But you might be seeing the TTR Mog on the road, the Optionetics Mog on the road sometime late spring, early summer. All right, so let's go ahead and move on. And so what I want to get into is I want to get right into the charts that we have. We're going to be using the option trader portion of tomsoptiontools.com. So I thought what I'd do is I'd just show you right now what we discussed on Monday, and we'll just talk a little bit about where we are. S&P, remember Monday we had that Friday close where we opened lower and we closed higher, and then we saw some follow through on Monday, which then became a 1,200 point up day. Yesterday we had a 700 plus point down day. Today we're up 784 points right now on the Dow as everybody's kind of getting their bearings. We did a couple of trades yesterday that I think are going to turn out pretty good. I was waiting until right now because I wanted to place a trade right now, all right, before I get too deep into this. So let's just go see what's going on here. Yeah, I mean, I'm sitting here, guys. It is 12:45, and I'm thinking, all right, if we're going to hang out in this area, I'm thinking about getting along this market before we get above this green line. Look at this, 1255, 105, and we've accelerated up already 15 points on the S&P just in the last 15 minutes. It's like a point in a minute. So this one's kind of gotten away from me, but I'll put the order in anyway. It's not in SPY, all right? What I'm looking to do is in IWM. So IWM, if I were just to kind of take you back, had just a couple days ago a rebuy and then another add-on right yesterday. So I'm looking at this and I'm thinking, wow, how often do I see a rebuy and an add-on, a second and third signal back to back? Never. So this looks like a very interesting signal. This is using the Darknet strategy that Jay was talking about yesterday. So I wanted to go ahead and put something in, and I didn't because I wanted to wait until we got on with the group together. So here's what I'm going to do. I'm looking at right now the March 20th, 2020, 151, 155 call spread. All right, buying the 151 calls and selling the 155 calls. All right, now if I wanted to do this for $500 or less, each one of these is going to cost me at 2 points. Are going to cost me $200. So I could do two of them and stay below the $500 threshold. All right, if I wanted to do, if my limit was 1,000, I would put in. How many could I do for $1,000 or less? I could do 5 because 5 times 2 is going to be, you're going to see $200 times 5 contracts is $1,000 bucks. Now I'm going to put this in the limit of 2, even though that's still above the bid. There's a good chance I could catch that by the end of the day. So I'm going to preview this. All right, there it is. And I'm going to go ahead and place that order. And so that's going to sit out there. If we get a ding, that'll be great. This is the only order that I have placed so far today. I've been kind of sitting and waiting. And like I said before, I'm happy to place orders in the ETF markets because, no one person or even a small group can move that market. That's a crowded trade. But when it comes to stocks, I'm not going to place those orders ahead of you if I'm showing them to you right now because I don't want anybody in here to accuse me of front running. All right, front running is me placing a trade and then telling you about it. I won't do that. All right, the only reason I'll do it in ETFs is because the ETFs are so liquid that just doesn't happen. But for individual stocks, I don't want to do that. And so, but I want to show you again spread trade, and we're going to get into spreads a little bit today. I'm going to spend I got a couple of slides I want to talk about on spreads, but let's get through the rest of what we were discussing. S&P again closed above the channels. This was a bullish signal. All right, got a little crazy there yesterday, but it looks like it's come back, and it looks like we're now above yesterday's high, which is great. That just gives us follow through. Now, yesterday I talked about the bonds, and I mentioned that the TLT popped on the rate cut, but I felt that move was overdone. And I'll tell you, there was a lot of people rushing in and actually pushed this thing as high as it went almost to 160 and then fell after that. All right, so where are we today? I'm going to slide and I'm going to show you. Okay, so here's the S&P. Here's TLT. All right, TLT finally moved down, and now we're back down around about 156.26 is where we are right now. All right, so yesterday, if you remember, I was doing the 156, 157 call spread, and as long as if we close below 156 on Friday afternoon, I keep that entire spread. All right, so I'll be monitoring this between now and then. But that was a spread also. That was a bearish spread. right? So I'm bullish on IWM and the index markets. I'm bearish on bonds, all right? Let's move on. US dollar was finding support even after 50 basis rate cuts. We were looking for support in the US dollar, and we were having a lot of channel consolidation. So what's the US dollar doing today? Let's see if how that's performing. Here it is down here, UUP. Okay, so I see that it's up a little bit today, all right, but is it since yesterday? This was yesterday's close, pop, so it is up, all right, so we are seeing some buying pressure coming back into the US dollar. Now, let's move on over and take a look at the next one. USO. Remember USO, we were saying was going to be hitting support around the $9.50 level, and that we were looking for it to get back up to around 10.5 to 11.20. That would be the areas of resistance. Where is USO at right now? USO is at 992, so it's up slightly. All right, it came down, it bounced down around here around the 975 area, and now seems to be trying to gain some momentum. I really need to see, I want to see this one get above and close above 10 before I really start to get excited about that. But I took a trade. I took a trade yesterday in OIH. So let's go see what's going on with OIH. OIH is down. Now, I am kind of bullish on this above 850. So if we're above 850, actually we really need to be above 875. That's my break even on this trade, but I've got until the 20th of March before that becomes an issue. So right now, I mean, I'm pretty close to where I got into this trade, all right, and that was using the $8.59 spread. So again, buy the lower, sell the higher, and what do I want it to do? I want it to go up, as long as it's above 875, 877 actually. That's going to be my break even by March 20th, okay? So that is OIH. All right, so the last one that I want to discuss with you is GLD. So yesterday I said GLD had a wild week, but it's back on the rise. Where is GLD at today? And remember, interest rate cuts, that's the whole reason that GLD was going up, is because all of a sudden now, where are you going to put your money? Are you going to put it in a fixed income that's going to be possibly at less than 1% soon? No, you're going to put it in the gold. Now, let's see where gold is before I go toot my horn. GLD. All right, so gold's up 0.5 percentage point today, and you can see this is a kind of an idea of where it closed at. This is where it closed at yesterday, and then we popped up this morning to a high of 154.96. We pulled back to 154.03, and now we're at 154.67, which is up about 0.5 percentage point. So it is moving in what I believe is the right direction, but I think it's going to need a little more time to get up back above. I'd like to see close above 155, and I'll feel real good about that one. All right, so that is the four corners, or now we'll call it the five corners of the market. All right, so if I were just to take a look at a couple of comments on the board here right now, just to see what is happening here. So I still see people talking about that truck. Yes, you're right. No ordinary RV. A little bit more on spreads. Why did I do a spread? Why am I doing spreads versus just simply buying, since these look so cheap? And we're referring to like USO and TLT. Okay, so again, they might look cheap, but here's the part where going into Tom's option tools, you get a really good idea whether you're looking at something that's cheap or expensive. So take a look at, let's look at TLT first. So here's TLT. Now, I mean, this one doesn't look cheap by where it was. All right, but it does look cheap when you look at the price compared to some stocks that are out there. What I'm talking about is something called options implied volatility, and I'm going to lay it out here for you right now. So we're going to update this chart, and what I want to do is I want to look at just the stock chart, and I want to look at the options implied vol. So you're going to see a red line that pops up on here. Look at this. This line is interesting because it's almost correlating with the chart. As the chart goes up, so does options implied volatility. Now, it was at its highest a couple of days ago. It's dropped a little bit, but I mean, it's not trading down here around 10 where it was at the end of January, right? It's now at around 18 and still dropping. Now, what I'd like to see is that drop could be a precursor to where the actual ETF could be going here in the future. All right, so that's one thing, but it's still high. In my opinion, it's higher than the average. Now let's take a look at oil, all right, or OIH. OIH is a cheap, I mean, look, it's, what is it, 9? I mean, it's 8.5, 8.75. I mean, you know, some people might argue and say, just buy the stock if the options are expensive. But you might think, well, how expensive is a $9 call? It's not that expensive in terms of price, but it's going to be very expensive in terms of implied vol. What's interesting is, and I missed this, when this thing first made the drop last week, and that implied volatility was above 80, there were options that the 850 calls were trading for almost $1. I mean, and this was March 850 calls trading for $1, which means it had to go down to 7.5 within the next couple weeks for you to be wrong. And I missed that. I looked at it, I overlooked it, and that was a big mistake on my part, because look at the implied volatility. It's dropped back from about 88 down to around 63, but still super expensive, all right, which is why I like those like spreads. So whether it's a debit spread or a credit spread, a spread is designed primarily to really just give you that that ability to cut your cost, cut your risk, and really kind of, you know, bring yourself into a position where you're hedging volatility. So, for instance, if you're bullish, a bull call spread involves, you know, buying more than, you're trading more than one option simultaneously. You're buying a lower strike, selling a higher strike on a bull call spread. You lower your cost, you lower your risk, and you lower the day-to-day fluctuation of that trade. So, for instance, if I were to give you kind of a textbook example, buying the XYZ 100 call, let's say that costs 10 points. Sell the XYZ 120 call, and let's say you get 5 points for that. You're putting on a trade where you're still bullish on XYZ between 100 and 120, but yet you're not buying it for $100, and you're not buying the call option for 10. You're doing the spread for 5. So you're able to reduce your risk, let's see, 95% from simply buying the stock, and 50% off from just purchasing the call itself. All right, what does your risk graph look like? Well, anything below 100 and you lose the $500. Anything above 120 at expiration and you got a $1,500 profit. All right, that is a 3-to-1 reward to risk ratio for this example. And then, of course, anywhere in between, you know, your break even is going to be at 105. Now, how do you get break even? You take the spread. All right, you take the buy side of the spread. In this case, it's 100. Add 5 to it, which is the cost of this trade, and 105 is going to be your break even at expiration. All right. And then when it comes to put spreads, well, these are bearish. They're just like call spreads, but they're bearish. You buy the higher strike, you sell the lower strike. And again, lower cost, higher reward, higher profit potential. All right. So when it comes to choosing the perfect spread trade, so now this is kind of where Jay and I are going to break up things a little bit for us. So I'm going to take us into Darknet. Jay, you good with that? You mind if I go darknetting?
Oh, that's fine.
Actually,
If you want me to also find one, I have one ready, and then I can just.
Before I do, my ADD kicked in, and the reason I say my ADD kicked in is because I wanted to go over this again real quick. So we're getting some acceleration. Okay, SPY. Let me just remind everybody what we're looking at here. So this is the Think or Swim platform, which is part of TD Ameritrade, which is now part of Schwab. Okay, so the Think or Swim platform, I find it's a very nice visual platform. It gives you a lot of capabilities. The two things I use on it most is the Market Watch, where I usually just take net change and I go, okay, what's up today? Amazon's up quite a bit in terms of points, and then is there anything that's dropping today? And I'll take a look at that, and I see Schwab TLT is dropping, which is great. That's what I want to see happening. We're almost at my maximum profit if we can hang out here for another 48 hours. And then of course MGM is down too, but everything else is moving higher of the stuff that I'm watching on this particular screen. Now, the other area that I like is the chart area. And what I've done is I've created charts here where I'm looking at the overall market. So I'm looking at SPY, TLT, UUP, and typically I look at USO here. I mean, GLD I'll throw on here every once in a while. So I have these as 5-minute bars. So this is a 5-minute chart. And what I'll do is I'll come over here to the end and I click and drag, and that expands the chart out so I can see what's happening today. All right, that's important for me. I want to see what's happening with this today. Now, I want to mention something to you. This was kind of yesterday. Yesterday, we had some comments and questions in the room. Oh, what if the Fed does this? Oh, what if the coronavirus does that? And my answer, and Jay, you know this, my answer is we don't trade. Guys, we don't trade on news, breaking events. We don't trade on what we think might happen, all right? We use specific trading strategies, 2 of which we're going to show you today, which is the Darknet analysis, and we're going to show you the money calendar. Again, we're going to really emphasize the money calendar.
RBT, rules-based trading.
Exactly. But before I do, I wanted to do this, and one of you that's in the room right now, where's John at? Let me see if John's in the room, because John brought something up yesterday, and I went and because again, guys, I'm not the end-all, beat-all on platforms like Thinkorswim. So I have programmers that help me put together whatever it is that I want, and so I had let me look and see if I can find him in here. We got a lot of people in this room today. Let me see if John's in here. If he is, I'm going to give him a shout. Let's see. There's a lot of Jims. There's a lot of Johns. I don't see him. I don't see the John I'm looking for. Okay, anyway, John O. He's going to hear this on the recording later today.
His name is Sean.
Yeah. So
not John. Sean.
Is it Sean? John Sean?
Yep.
John Sean. Let me see if Sean's it. Yes,
Sean O.
Okay, so Sean O. Thank you very much for the email that you sent over to support. And so what I'm going to do is I'm going to actually I'm giving you credit for this. And what I want to do is I want to give this to everybody in the room. So I'm going to give you this exact setup like I have here. So what Sean told me to do was he told me to come up here and go into setup and share this. So I've already done this ahead of time, and I've got the little sharing piece right here. So I'm going to click this. You're going to get this from me. I'm actually going to put it in the live charts right now. So let me go over and flip this to you guys. So go to the chat window, and you're going to see, there we go. So if you take that and you click on that, that's going to open up this workspace as you see here. And then if you have Thinkorswim already, you would click on the View in Thinkorswim piece, and it'll open it up for you. If you don't have it, you can install it. And so I just wanted to make sure all of you had access to that chart. All right. So there you go. So you got the chart set up just the way I have it, and we'll mess around with some more of these type charts as we move deeper and deeper into this in future sessions. So so there you go. All right. So now let's get back out of the intraday trading, and let's get back to what's going on in the markets right now, and looking at day trading or position trading opportunities. So
now stay away from Pepsi. If you're going into Darknet, that's cool. Just stay away from Pepsi.
Right. I saw. Oh, you know what? I had Back to the Future on last night, and I saw McFly was drinking an old Pepsi from the 50s. All right, so all right, so where we're gonna go, guys.
All right,
where we're gonna go is I'm actually gonna go back to Tom's tools, and I'm gonna go into Darknet analysis. That's under the contrarian trader you see here. Look at all of this cheddar right here. This is amazing. I've not, typically what happens is for Darknet to work, what we need is we need triple stack between, and what I mean by that is we need triple stacking to happen between long, intermediate, and short-term trends. And because of the pullbacks that we've had last week, and because of the upthrust that happened also, we're getting a lot of triple stacks that have been going on. So for instance, if we were to, now I'm going to this is a list, this is a big list. We could sit here the rest of the day today and look at this list, but I'm going to very easily take my Darknet stocks and I'm going to break it down into a smaller list. I have a lot of lists here in my own software, but I'm going to go to pennies and weeklies. And I'm going to click on search, and now I'm looking at quite a bit less on the list here. So one of the things that I like to do is I like to go through and verify. I see Pepsi, I'm going to stay away from it, Jay. But I like to go through and verify the chart and get an idea of where we are in the chart. Okay, now this is SSO. This is the ProShares Ultra S&P 500, which came down, and now we have a B. This actually came in this morning. So if you were lucky enough to check all these out this morning, well, a lot of them have started going our way. But can I find a chart that doesn't have such a big pullback in the last 6 months? And that's what I'm looking at doing. How about American Express? All right. Ooh, it's even worse. But I mean, you know, it's catching some bids today and has gone from, I mean, look at the stock. The stock was at 140 just 2 weeks ago, dropped all the way down to 107, and now we're back, we're at 113 after opening at around 110 this morning. All right, how about VMware? VMware had an earnings announcement that came out. That didn't help it. It dropped down. But you know what's very interesting right here? Take a look below. Actually, you know what? I need to bring up another chart of VMware. So let's go and look at the stocks and charts. And I'm going to bring up VMW. All right. Now, VMware is showing. Now, notice this. The implied volatility was high, but then it dropped back down. We went from the 70s down to the 40s. Still not as cheap as it was back at the end of the year, but this is what I wanted to show you guys. Let's go into, forget 120 days. Let's just look at 20 days. 20 days. All right. See that high and that low? If we get and we eclipse that high right there, that's just another reason to go bullish on VMware. And here's why. Look at all the volume. The average volume in this stock is 1.5 million shares a day. It went over 5.5 billion. So a lot of people panicked out of this thing the day after earnings. And here's the interesting thing. All the sellers are out. Again, this was, if you remember, the 1,200 point up day. Nothing happened to VMware. This was the 750 some odd point down day yesterday, and really nothing happened to VMware. Now, we have an 800 point up day today, and VMware has now woken up. It got woke, Jay. VMware got woke. I've been waiting.
You are so hip.
A day to use that term. Got woke. And so all of a sudden now it's waking up saying, okay, you know what? Maybe things aren't as bad as they were a couple days ago, at least for the stock. So this looks very interesting. All right. So when I look at this one, I think, all right, what can we do? And so let's back up a second. Let's look at Darknet again. How long do Darknet trades usually last? They're typically about a 3 to 4 week trade. So we can go out and we can look at, you know, some options are expiring in that 3 to 4 week time zone. And so I'll go to options. I'll go to the option chains, and I know this week's out of the question. Next week's out of the question. Maybe March 20th because it's a third Friday option. All right, so let's take a look and see if the spreads are a little bit better. Oh, they're better today than they were yesterday. Look at the 125s. Where's that stock trading at? It's 126.84. So 530 by 590. That's pretty good slippage compared to where we were. This is even better. 3 by 320. 140 by 160. All right, so again, you have to kind of look at this and get a determination of where this is likely to go. And you can do that just by simply looking at the chart. And more importantly, where was the chart? And I'm going to, I'll go back to this chart. I mean, we were at we opened at the 140 level, closed at 135, then the earnings came out. So 135 is an easy possibility to fill that gap, right? We're at 126.84 right now. So maybe, perhaps, maybe the 130, 135 makes sense. All right, let's just see what that would cost. It's going to be cheap when you compare it to a lot of the other stuff that's out here. So buying the 130, selling the 135, and be able to do that for $160 right there. All right, This is the cost of the 130. This is what you would bring in on the 135. You're almost bringing half of it back in. And so there you're talking about $1.60 or $160 for the spread to make a potential 340, 2-to-1, right? 2-to-1 reward to risk ratio. That's on VMware, right? So that's how I go through and look at these, is that I'll go through and I look at these charts and I try to get an idea of where they are, where they've been, and is there anything else significant about it? Like, okay, look at ETN, Eaton Industries, right? Anybody in here know what this company does? All right, just shout it out on the Q&A board. What is Eaton Industries do? What do they do? Yeah, Kathy, I agree with you on VMware. Yes, Mark, auto parts and semi equipment. You know what else they do? They do safety stuff too. They do a little bit of stuff in the safety area, which is, I think, why they didn't pull back as much as the overall market. But strong move today. And here you're talking about another one that, you know, if you look at this particular stock, I believe has the ability to come back up and take out its old highs for the year. And so, or this could be all-time highs. I haven't looked at a long-term chart, but the multi-year highs, it could take that out fairly quickly because it didn't drop that much compared to the rest of the market when you look at that 6-month chart. All right. Let's look at Philip Morris. I haven't looked at this, guys. I'm looking at this the same time you are. There we go. Apparently smoking, drinking, you know, all those sin stocks may be a good area to get into. And this is, you're not hearing about this on financial news. You know what you're hearing about on financial news? Because I know, because I watch it too. Medical supplies, utility stocks, and gold. This is what I'm hearing. This is pretty much what everybody's trying to come up with. You know, for me, I want to go into areas that nobody's talking about in hopes that they'll be talking about it tomorrow. And I think that's, you know, people are going to wake up and realize that the sin stocks, and let's throw Pepsi in there too, because it's sugar water. The sin stocks may be where to go. So, Jay, I think it's time that I go ahead and turn this over to you for a few minutes while I surf around and see if there's anything else that I like, and then you know, we'll kind of tag team here for the rest of the day.
All right. Well, you and I talked. I think what we'll do, Tom, is if you're cool with it, is the edit list stuff. I'll push till next Monday.
Absolutely.
Because what we want to do with what you've done right now with Darknet, you wanted me to get into money calendar and go through explaining, you know, much more detail what the money calendar is. And I have a whole slide presentation for that. And what I'll do is I'll get those slides over to you as well, Tom. So if you want to put those in the email with the recording today,
yeah,
you can do that. Cool. All right. So let me see where I am on my screen.
I just handed it to you.
Okay, I took it. And
I see you.
Okay. Real quick, somebody was asking about one of the stocks that we were looking at. If you want to look at your save trades, go to access or go to the save trades thing, and you can do that by going into trades, save trades, click on save trades. It'll come up the save trades page, and you can pick whichever folder you want. I'll do the Darknet bullish, and here they are. Let's click check all, and then let's do a profit loss of those. And DHI, I don't have in the folder here. I think it's in a Darknet with a candlestick pattern folder. So here's the Darknet bullish so far. The reason I'm bringing this up right now is one of our fellow students, ladies and gentlemen, Declan, just sent me an email before we kicked off today, and he says he popped 100% on Pfizer trade last week. So if you guys have it in your folder and you're tracking these out, you can go ahead and make the note that there was 100% opportunity on the Pfizer. Here it's showing you the percentage change right now. So the only one that's at about a 50% loss that needs to be watched and monitored for the most part is the CHRW. And then here's the percentage change right now. We're up over 50% on the last two, the Lilly, the Pfizer, the BMO, 20%. What's that?
Nice.
Yeah, that's pretty cool.
And congratulations, D-Clan. I know, you know, you've been kind of with us for a long time now. I know you're on the other side of the pond too.
Yep.
So, I mean, here's a guy. here's a guy that's doing this at night or in the afternoon or evening, depending on what time he's getting it all together. But you know, congratulations, keep up the good work. And you know what? This is all about just being repetitive, guys. It's not about throwing all your chips into one area. That's the biggest problem I see with most people who trade is they start out good, they start out right, put a little bit here, put a little bit there, and keep it non-emotional. And then all of a sudden, for whatever reason, you decide that it's getting boring and you want a little more excitement or whatever, or maybe you take a few losses and you decide I'm getting that money back, and you shove everything into one stock right before the big drop. All right, that's where people go wrong. This is a business that my belief is it's a business of numbers, and that, you know, small repetitive actions, especially in today's environment where commissions are getting less and less and even free in some cases, you know, that now it favors the little guy. You know, a couple decades ago, you had to swing some big size to get over the commissions, you know, of what was being charged then. Now it's not the same. It's not the same thing. Now, really, you know, to me, it's what is your rules-based trading system, all right? And hopefully you're not trading with the herd. And the herd is in my mind everybody else out there that's just kind of buying and selling on hope, fear, and greed. And it's about making smart, small, calculated decisions.
Absolutely love that education, Tom. Thank you. Yama wanted to point out, Tom, that she or he is up 25% overnight with that Merck trade. So, you know, thank you, Marcus.
Jay,
thank you, Tools. Thank you, System.
A couple people were asking if you could do an update on DHI.
You know, I tried to find it, so I asked the guy if he has it, if he can give us a recap where he sees it currently right now.
Well, I mean, it's gotten away from us is what's happened. You know, I mean, look at Monday, that thing was down around 54. It was below 54, and today we're almost at 58. So, I mean, it just got up and it left the building. And
we were looking at it through an outside through another venture that we do, that we were entertaining getting after it, but that thing didn't fill for us. If it filled for you guys,
Jay, and you know what here is, you know, being in here with us. Think about this. You know, I didn't get DHI, but you know what I did get? I got Home Depot, which is kind of the same thing. Right. You know, I mean, you know, if you were to put a chart up of HD, they're not builders, but they're in the home building sector. And that one I did get hold of, and I actually got out of it today and took a nice little profit.
Good for you.
You know, if you take a look at what Home Depot's done in the last couple of days, it literally made the same move. And so if you're hanging out here, you know, with us and you're using this software, you know, you'll find that you get, guys, we don't get the signals, you know, with the software before you do. It just doesn't happen. We all get them at the same time. And so, you know, you're able to look at this the same time I do, which is in a lot of cases the night before. And so you're able to make that plan and get that plan going well ahead of the market. And so that's the big thing. And that's what we're trying to show you here is education and repetition. And so, Jay, I'll turn it back to you.
Pete's writing in what he's heard from many of us. And in fact, I love it. You know, Tom, when we teach, we wonder how much of it's being retained, how much of it's being actually applied and making a difference for folks. When you see one person write down a mantra, if you will, that they've learned from you, from one of our instructors and such, it feels pretty good. But when more than one person is repeating that same mantra at the same time, now you know you're making a difference, brother. So nice job on that, Tom. The mantra is trade small, trade often. And they've heard that from Jeff, from you, from our instructors. And so Kathy, Pete, these guys are all typing this stuff in right now. So that's very cool to see.
Exactly. I agree.
Okay. All right. So let's get into this. I have the disclaimer slide up. Tom, I'm going to transition everybody into Money Calendar. And I'm going to start from the beginning of this presentation here for us. All right, we know the disclaimer, Tom already did this. What we're going to transition to now is a rules-based approach to Money Calendar. What you've been seeing me do in the past handful of sessions is basically what this string of slides is instructing everybody to do. I put this together for presentation a couple of years back. It still holds true today. The rules haven't really changed that much, other than really the target goal on a percentage ROI basis we're shooting for, because of today's market environment with things so volatile that it's pushing prices to higher extremes, and it's spreading that bid-ask quote, if you will, the bid-ask spread of these options outside the norm as well. But everything else that you're going to see here is still intact to this day. And what money calendar is, well, here's what it's not. It's not a technical analysis tool. And that freaks people out, because we've all learned to go to the charts, go to the charts, go to the charts. What do the charts say? And even now, Tom, when people see a money calendar candidate and they see a potential 4-point price move, they still want to go see what the chart looks like. And that's fine, but just recognize, folks, that it's not based off volume. It's not based off a MACD, a stochastic, or an ADI or anything like that. It's purely not. It's purely a price move analysis is what it's looking for. We're not looking at technicals. If you add in technicals, there's a likelihood it will talk you out of a trade. But there is some cases, in the case I'm specifically talking about is what Tom showed many of us a couple weeks back, which is the one in PUT, is where we combined the technical analysis of Darknet with the price analysis of money calendar. And when the two combine there, that gets pretty powerful. But all this other stuff is not being used for money calendar. Here's what money calendar is looking for specifically. It's running a scan over millions of data points, looking at securities, stocks, and ETFs. And it analyzes from a period of days, the open price from one day, one trading day, to the closing price of another trading day. So we call it a start date and an end date. We put it to the calendar dates just so you guys have a premise of kind of like your timing of what day to start the trade, what date to end the trade. But it's more or less considered a period of days than it is specifically calendar dates. But we're looking at over the past 10 years, has this stock made a move higher or lower? And if it has done so 9 of the past 10 years or 10 of the past 10 years, it will show up on that money calendar scan. What we're looking for on top of that is the average price move that it's made over that period of time. We can then use those numbers and extrapolate out a target price for the stock. One of the parameters that we're looking for when it comes to the money calendar analysis is what's called the power meter. What we're looking for in the power meter is a positive number. The higher, the better. And it doesn't matter whether the security is showing a bullish or bearish move. The power meter is gauging if the profit in the higher or more recent years are higher and getting higher than the cumulative past 10 years. We want an upward slope. Visually speaking, that's what we're looking for. That's a pretty ideal power meter, wouldn't you say? So what we're looking at is the past 10 years to the current. In the more recent 3, 4, 5 years, are we having higher profit moves? And in the tools, you can put your cursor over the bar and it'll bring up a small window that shows P and L, profit and loss, and the profit. On a call or on a stock being bullish, that means the price is going higher. So if you bought at one price, sold at a higher price, that's your profit. On a bearish trade setup, you're still going to see green bars. You're still going to see these kind of histogram bars, but that doesn't mean that the stock's going higher. This is not a directional indication. Power meter is not assessing direction. It's only gauging the profit moves over the past 10 years. So if it's a bearish candidate, but you see a green big bar here, it's still a profitable move. What it is based off is the premise of a short sale of the stock. So if you sold the stock at 50 and you bought it back to cover at 45, you're going to profit that 5 points, and that bar will reflect a 5-point profitable move to the downside on a bearish security. So we're looking for the slope. Now the tools will not draw in the slope, but you can put a visual representation to this if you connect these tops of these bars, that yes, the power meter is getting larger, and in the more recent years we have a stronger or bigger profit moves than the cumulative 10 overall. What further is analyzed? We're looking at accuracy. We can get other readings on these securities within the tools and find them at a 67, 72, 78, 85% win versus loss, we want 90% or better, meaning we want a stock that has traded higher or lower 9 of the last 10 years. And so when you're looking at this data in the tools, that column for accuracy tells you if it's done a move 9 or 10 of the last 10 years. Then we look at the end date. And the end date is important to us because that's going to help us determine our options expiration. We want stocks that are moving out 20 to 30 days. So you have the number in the horizontal bar here, and then you have the actual end date itself over here. We're going to use that end date to assess our expiration. As I've said before, if you have an end date, in this case it says July 1st, we would not want to find an expiration for an option trade that expires any time prior to July 1st. In a sense, that's like cutting off our legs before the stock or security itself has a chance to move the full amount of days. Now, if you get 100% gain prior to the end date, you're happy with that 100%er and you take the trade-off, by all means, we have no problem with that. We have no problem with people making money, all right? But if you cut the trade-off, say about a week or two prior to the end date, there may be 2 more weeks of time that this stock or security needed to move higher, and or there might be 2 weeks of more profits to come that you don't get to participate in because you cut your expiration off too short. So we pretty much default to the expiration just past the end date, and we prefer to get the 3rd Friday of each month. That's where the most liquidity is, the tighter spreads are. Those are the standard options expirations versus the other weekly options expirations that may not be as tight with their liquidity. Then we look for the average profit, and the average profit to me means average price move, okay? So $24 is the same to me as 24 points, okay? So you're going to take that average profit, you're going to add it to your closing or current price and get your price target. We'll explain that in just a moment, but we are assessing the average profit. So here's a formula and process of the things that you're looking for when you look at that data table. You want a positive power meter. So when you get into the tools, you're going to double left click on the power meter and rank them from the highest to lowest, and I'll show you that when we get there. We want to find those securities with a 90 or a 100% average profit move. And I say 3 or better. That doesn't mean 3 or better or greater than 3 only. There may be times where a less than 3 profit is able to be found with a spread. The end date, we want 20 to 30 days out, and then our last loss, 4+ years back. It's preferred, but it's not a deal breaker. If we have, in that power meter, those bars, if there's a loss last year, we pretty much will always avoid that. But if we go a few years back before the first loss, that's fine. We just prefer it back in the 6th, 7th, 8th, 9th, or 10th year. Continuing on, as I stated, we like the $3 or higher average price move. The reason is because it's easier to find a straight call or put, a long call or a long put option trade that has a chance to double with a higher profit or price move in the stock. Less than 3, you're probably not going to find a double. But like I said, in that case, you default to going and looking at a spread opportunity and see if there's like a $1.80 move or a $2.10 average profit move. Is there a spread that can get a double? Because that just needs to be up above a certain price, depending on the spread you set up. So there's the rest of the dialogue. Harder to find an option trade that can double less than 3. So 3 is ideal, what we prefer, but not a deal breaker. Now, a return on investment goal. Prior to this funky market, we've always liked to go after the 100% returns. One of the trade management rules Tom's always given us is when you hit that 100% target, close half your position, maintain the other half for maybe that next double, a 200% return, or whatever you can manage between the time you take your double off of half your position to the expiration or end date for your system. With ETFs, it does work on ETFs. It's the same process as all those previous slides. The only tweak is because the ETFs are not as robust. They don't move as volatile. You know, an ETF on utilities is not going to move as far and as fast, even on a daily basis, as an Apple or an Amazon. So because of that, you're not going to have a ton of moves that are greater than 3 on these ETFs. With that, then we reduce our profit goal to a 50% gain. And whether you do 50% on all or 50% on half and hold the rest, that is up to you to decide in your trade management. Here's the continued process from here. When you bring up your tools and you bring up your money calendar, there is some information you're going to be wanting to write down. And we've done this. And like I said, you can watch the past recordings and you're going to see me talking through all of these slides and these steps that we've done. So we've been doing what these slides have been saying. You just now have the slides in your possession, or will, to then practice going through the machinations of this process of Tom's trading process. Find a low risk trade. Find the setup. Spot the opportunity is number one. And money calendar is one means to spotting an opportunity. And then we go ahead and look to build the low risk trade and manage the affairs accordingly. So when we're doing the analysis with money calendar, we want to write down on a separate sheet of paper the ticker symbol, the expiration date. Remember, it's the expiry just past the end date. Maybe to be safe, when you're first starting out, you push it towards the 3rd Friday expiration for the month, because that's where the highest liquidity lives. Then you want to write down your closing price, and we advocate doing this at the close of market for reasons that I said in yesterday's presentation. So, you know, revisit that, because it talks about, you know, doing this analysis intraday versus end of day. But whatever we do, if we do closing price or current price, we then also write down the average price, and then you add those two together. You add your closing or current price plus your average profit price to get your target price. And that target price is going to help you in setting up your options trade. And then we can get into using options with the money calendar data from here. So Tom, I'm going to switch over to the tools now. And if there's any questions you see we need to address right now, we can go ahead and get to those as well.
Alan just mentioned that the search you did on Darknet and the other searcher reduced the amount of stocks down to MRK, LLY, and WSO, all home runs. Thanks.
Very cool. Nice job, Al. Yeah, those are the candlesticks. So if Kevin and the programs are listening in, man, we can't wait for that bullish candle reversal plus Darknet.
And Thomas has a really good question, which has been asked before, but it bears repeating. On expiry, if there's a weekly before the monthly, should you take the weekly or only use the monthly? I think what he's talking about is, let's say you have an end date and it falls on a weekly option and not the monthly. Does it make sense to take the weekly or the monthly?
Again, for reasons of liquidity that you've been beating into my head too, is just like, you know what? If you feel confident in the weekly and the slippage isn't too much to overcome, yeah, there's a consideration for that, but it's best to find maybe that monthly out there.
And I'll expand on that for a moment. On stocks, I almost always look at the 3rd Friday. If it's an ETF, they're much more liquid, and you can go with weeklies much more often. And then, and I think that's pretty much it, Jay. So go on ahead.
Okay, and then Jim, I typed in part of an answer to that. I'll get the other part of the answer to that either via email or later off the session. All right, so here we are. Let's go back just real quick. If we look at Tom's tools, we log in, and here we are. Money calendar is going to be found in the complete trader column panel. Click on money calendar. You're going to have all of the days. We started out with the color coding, green for bullish, red for bearish, and then different shades in between that. We had some colorblind folks that said they can't distinguish green from red, so we put in the numbers. We put the bullish, out of the total number of securities, 71 for today, 50 of those have shown a 9 or 10 out of 10 success rate of moving higher over these past 10 years from this start date, and 13 are showing bearish. So it's majority bullish, hence the color coding, but now you have the numbers to back it up in case you have a colorblind or an issue with distinguishing colors as well. So when we click on that, we see the page like the slides showed. We said first things first, double left click on power meter. And double left clicking on power meter again ranks from the highest positive power meter to the lowest. So anything 1 or higher is a positive power meter. The other column that we show here is the last loser. That means how many years back was that one loss? 7 years back, a dash. That means it hasn't lost. That's a 100%er right there. So maybe you guys start with the 100%ers. And you can then go ahead and double left click on accuracy and rank by the 100%ers and such. But again, our main focus first and foremost is that power meter. When you double left click on that, that's your sort. And you can go through these, go through each one, bring up the tickers, look at all the data and all the information and such. But there's one that I really wanted to highlight today, and I told Tom to leave this one alone. Ticker symbol PEP stands for what? PepsiCo. Why do I want to pin my ears back on PepsiCo? You can type it in if you know. Some of you guys won't because you haven't been on all of these sessions prior. And you may not have seen the presentation that Tom did on and I'm looking for the words, Tom. Seeing if anybody's picking it up. Why Pepsi? Okay. Peter got it. Because it's also a buy on Darknet. Absolutely. Tom calls this strategy his 1-inch putt. So if we went to Darknet and we looked up the list of Darknet, and we're going down the list and we're looking at Darknet plus what option trade to consider, what do we see here? PepsiCo. PepsiCo is a Darknet buy, and it is also a money calendar buy. So if you're trying to distinguish, which one you're going to do, boy, if you got a stock that's on a buy from a fundamental or a price move projection that's not based on technicals, and you get the same stock on a scan that's based off technicals, you've got two different viewpoints saying that this is a viable opportunity. The one thing you don't want is a bunch of yes men. You don't want a bunch of indicators that are analyzing the same thing. There's a distinction between linear and collinear indicators. We can get into that another day and such. But this is a situation where there's two different viewpoints, a price move, more of a fundamental perspective, and a technical perspective, both saying this one could work, or this one has worked, in fact. So there's PEP, and that's why we're going to favor this one. This is a 1-inch putt, ladies and gentlemen. We found it, and we have videos on how to find the 1-inch putt. Go to the library. Based off what Tom taught, I created a video for that. It was approved by Tom. It's up there. You guys can watch that and figure out how to go find these. We're skating through all of that, and bottom line, we found it. PepsiCo there, PepsiCo on the Darknet buys. Now we go into the options analysis. And let me find a page to do that. Well, I already brought it up in this here. Here's a risk graph that I found right now, but how did I get to this page? Let's do this. We can go up and go to our searchers and multi-strategies and then click find trades. But before we do this, folks, we got to write some information, don't we? What in the heck is the game plan on Pepsi? Well, right now we have to write down, like the slides have instructed, and you'll have these slides. It says write down the ticker, PEP. What's the current price? I show 140.10, 140.10. That's up almost 50 cents since before we started talking, Tom. So 140.10, the average profit move, it's over here. There's PEP. The average profit move is 315. Now, if you want to click on the ticker symbol, you can go to the next page that has the same information here. There's your average trade 315. How's our power meter? Well, it's positive. We set it up to look for that. In fact, the biggest move over these past 10 years was last year. And it's at least 5 years back that we had the one and only loss. So this looks favorable. So we have 140.10, 315 is the average profit move. What would that place our target at? 143.25. And the end date shows right here, April 14th. So what's the expiration just past April 14th? You can go to your calendar, look it up. And hallelujah, it is the monthly. It is the third Friday of the month expiration for April, April 17th, okay? So now that you have all that information written down, you don't need to hang out in Money Calendar anymore. If you go to the options analysis and you want to go back to find out what's the average profit, what's the end date again, you have to start all over going back to Home, Tom's Tools. It gets to be a pain. So note, you guys can open these tabs up. You can get into the tool in more than one tab. So you can have your options data up and you can have your Money Calendar data up. So here we are. If you don't have Pepsi, and what I did is we went to, again, searchers, multi-strategies, find trades, type in Pepsi and click change. If you don't, whatever symbol was there prior is going to be what it searches on when you click the search button. But change it, bullish, leave implied volatility where it's at, options expiration less than 45 days, and Tom made the case for spread, so let's start with spreads. Let's click on search. Now what it does when you click on the strategy, it'll auto default that into the selected strategies here for you, and it will default search for bullish percent to double. Don't worry, I'm washing my hands, we're good. All right, so there's the search. It's going to run, and we're looking for this column right here, the click trade below for options analysis. We're looking for anything April 17th. I'll tell you there were none. There's a certain amount of line items that will be brought up, and if you don't find it in here, you have to go the old school method, as I call it, by going back to the options tab, click option chain, and that's fine. Because we have the information we need written down on a separate sheet of paper, we can go to the option chain and still figure out and start looking for option spread ideas. So we don't want the March 6th expiration, so we'll click the check mark in that box to get rid of it. If you don't have the symbol Pepsi, type it in PEP, click update, and then go ahead and take that check mark out of the first expiration month. Find the one you want, April 17th, left click in that box to put a check mark there, and now click update. And what you're doing down below here now is bringing up the options data table for the April 17th of 2020. This is about a 15-minute delay on the tools, but it's pretty close to where it is right now when I said it's 140 and 10, 140 and 4. So now we have a target price. We're looking at a bull call spread in which we want the stock to go higher, and we want it to go higher than the sold strike of our spread. And with a bull call spread, call debit spread, you're going to sell the higher strike, buy the lower strike, okay? So if we need and want the stock higher than our sold strike, in the worst case situation at expiration, that's where we're going to realize max profit potential anyhow on this spread. We want to find a strike price that's less than our target price. Our target price is 143.25. So what can we do? We'll look at a 140, okay? And we're selling that 140. We would then be buying the 135. Okay, let's click on the risk graph. And there is your cost. It's a $315 cost on a 5-point wide spread. In order to double on a $5 wide spread, we need a cost of $250 or less. Maybe you don't like this because you don't have a chance at doubling your money. But what did Tom say? In this environment, maybe 100% gains on your trades aren't as realistic in a normal market environment. So you then have to decide, here's the deal. Am I happy with a 58, 59%er? You know, not bad for a 44-day trade, right? How would you guys like to be able to bank 58 to 60% every 40, 45 days? Okay, but that's it. You can go down here and look at the chart and say, where does it need to be above 140? We're there right now, aren't we? A little bit, 10 cents or so. So if we can just maintain this price and stay there until expiration, just keep letting that theta decay work in your favor. And as long as it stays above 140 and is there at expiration, you're going to bank that 185 bucks. Okay, so there's that. Let's go back. What if you want to just play around? Okay, maybe I want to set this up and look at a 140, 145. You know that the target's 143.25 and it's not going to get above 145. So you have to know that going in, that setting up this kind of a situation where you're going to sell the 145 by the 140, You know, based off the target projections in the past history for money calendar, it doesn't project PepsiCo above 145, but you still may want to look at it. And this is the part of utilizing these tools where we call it just messing around with the tools. So click on your risk graph and see what you got over here. Now it's going to show you 128% profit potential, but that's based off what? The stock trading above 145. It may do that, folks. It may do that, but we can only use the tools and the past history and extrapolate the numbers based off that going forward. Going forward, we can expect 143.25 if it just hits its average. So here's the deal. If you like this, just realize that that's likely not going to happen. You can go ahead and adjust the zoom on this and say, okay, if the upper hits the price target of 143.25, what does the profit potential look like? So enter in your upper on your stop limits, because what you're doing is you're adjusting these two numbers, the lower number on the risk graph, the upper number on the risk graph. We're going to change that upper number on the risk graph to our target of 143.25 and apply those settings to that risk graph by clicking on that green button that says so. So look at this here, that black line. If you have to wait until expiration now on this, and it only hits 143.25 and is there at expiration, before it expires, you know, before the day closes for that trading day, go ahead and, you know, look to close this trade, and you'd be looking at about $106 profit. So $106 profit on a $219 cost, you know, maybe you like that still. Okay. So there you go, Tom. That's the 1-inch put opportunity. That's both a money calendar and Darknet stock. It's PepsiCo. That's our ding, ding, ding for the day.
Awesome. So Jay, you ready to hand this back over to me?
Let me find you and I'll do that right now.
Cool.
Unless you've taken it before I get there.
No.
You're pretty quick, but here we go. We'll find you. Make presenter.
You know what?
There you are.
There it is. You got it.
Yep.
Okay. You should see my screen right now. So as we are jumping into the 2 p.m. hour, you can see spiders in S&P has accelerated up. We've been talking, it's been kind of in a bit of a range. This is great for me. The bond market's still collapsing and hitting new lows for the day. I'm loving it. UUP has kind of dropped down and has become a little bit of a bear, but still it's up on the day. The one that's interesting to me is oil has still kind of been sliding off. And so I might look around and take another stab at this before the market closes. So I'm going to be looking at that one in the last hour of the day. All right, guys, you know what we do here. We spot the opportunity, which is rules-based trading. We create that low-risk trade. Again, that is using options with acceptable risk and probability. And then finally, we plan, execute, and manage this. And this is the part where we're just using our preferred broker to do that. And so I just want to remind you here for a moment what is going to be coming your way, because I'll have that recording out to you here shortly. Now, that recording is going to include not only this recording, it's also going to include the money calendar slide deck that Jay just showed you. We're going to give you that slide deck as well. For those of you that are Thinkorswim users, you got to get two things. You got my chart set up. I put that on the chat box today, but I'm going to put that in the email as well as the indicators that I've been talking about this week. And that has a step-by-step, that study, that ThinkScript study. There's a step-by-step instructions on how to install that for those of you that have Thinkorswim. So that's going to be coming to you here within the next couple of hours. If you have any questions on the webinar or any on options education that we do, both here on the webinar and outside of this webinar, just feel free to email us at support@tomgentile.com. Next week, we're going to be getting into the week in review. We'll look at that on Monday. We're also going to do spreads once again. We'll look at money calendar. We'll look at Darknet. But on Tuesday, we're going to start setting you up for a spread called the calendar spread. Now, this is interesting because of volatility, and it might actually be a great time to learn this delta neutral trading method. And also Tuesday and Tuesday or Wednesday, I'm going to have trader Jeff Beamer is going to be joining us to give you a look into mastering the calendar spread. So that's what we got going on for next week. Once again, come and join us 1 p.m. on Monday. And by the way, for those of you who are looking for a subscription to Tom's Option Tools, it starts at $79 a month. All you got to do is just subscribe. To get there, you just simply need to go to tomsoptiontools.com, and right where the login is, whether you have a login or not, above it is subscriptions. If you've never subscribed before and you want to, click on subscribe. If you are renewing and you have a login and password, you just need to renew, click on renew, and you just follow the steps there, and then that'll get you to the different types of modules that we offer there with Tom's Option Tools. All right, guys. Hey, thanks again for joining us. Glad to have you, and we'll see you again same time next week. We'll start this thing off right again Monday at 1 p.m. All right, have a great afternoon, everybody, and I'll have a recording coming to you shortly. Thanks. Bye now.